Imagine waking up tomorrow to find your daily life has suddenly become noticeably more expensive. Gas prices jump overnight, plane tickets surge, and the cost of groceries creeps upward before you even reach the checkout. A disruption this severe wouldn't necessarily stem from a global pandemic or a collapsing banking system. Instead, it could start with a simple physical traffic jam. A traffic jam located in a stretch of water so narrow you could drive across the entire width of it in less than half an hour. This is the Strait of Hormuz. Every single day, an immense volume of the world's oil is forced through this tiny 21-mile gap. The global economy is uniquely exposed to this specific flow of energy, as no existing infrastructure can replace that volume if it stops. Looking at the map, the Strait of Hormuz sits between Iran to the north and Oman to the south. It serves as the only exit point connecting the Persian Gulf to the open ocean. Because of that geography, some of the largest oil producers on Earth, Saudi Arabia, Kuwait, Iraq, the United Arab Emirates, and Iran itself, must send their maritime exports through this exact corridor. The physical scale is difficult to comprehend. Roughly 1 out of every 5 barrels of oil consumed anywhere on the globe passes through here. Natural gas follows the same route. The strait serves as the primary exit from massive quantities of LNG exported from Qatar. That means power plants generating electricity, factories manufacturing goods, and heating systems in millions of homes all depend directly on the uninterrupted movement of ships through this single waterway. The vulnerability of this geography is well known, but a complete physical blockade isn't actually required to damage the global economy. Energy markets operate on expectations. The moment military tensions rise in the region, oil traders immediately price in the risk of a disruption, driving up global costs before a single barrel is even delayed. And there is a documented history of military incidents here. Commercial tankers have been attacked, and ships have been seized mid-transit. To protect these vulnerable commercial vessels, international naval forces continually patrol the nearby waters, keeping the area heavily militarized. Because the shipping industry has no alternate maritime route, even the rumor of instability around Hormuz acts as an immediate tax on the rest of the world. Let's trace what happens if this passage effectively closed to shipping today. This chart shows the immediate economic chain reaction. First, as global supplies drop, crude oil prices instantly spike. Traders react immediately to the constrained output. Second, fuel refineries absorb that raw material cost. They process the expensive crude and immediately raise the wholesale prices of the gasoline and diesel they produce. Third, aviation and maritime shipping companies face those surging fuel costs, forcing them to drastically increase their freight rates just to move goods across the planet. Finally, manufacturers and food distributors pass those multiplied transportation costs directly down the chain to the consumer. Energy is the hidden foundation of everything we build, grow, and buy. A geographical choke point in the Middle East guarantees inflation at cash registers everywhere. If the global economy is entirely exposed to a 21-mile stretch of water, the logical question is, why haven't we simply built an alternate route around it? Certain Gulf nations actually have. They've invested billions of dollars in overland pipelines designed to pump oil around the strait entirely. But looking at this graph comparing capacity limits, the mathematical reality becomes clear. The daily volume of marine traffic moving through Hormuz vastly exceeds the total maximum output of all those alternative pipelines combined. And while renewable energy and electric vehicles are expanding rapidly, global heavy industry, aviation, and maritime cargo shipping still operate almost exclusively on fossil fuels. The infrastructure alternatives exist on paper, but the physical scale of global demand leaves the world tethered to this specific bottleneck for the foreseeable future. This is exactly why foreign nations monitor the region so closely. Keeping this tiny waterway open is a matter of national economic survival for global superpowers. China relies on this continuous flow of energy to power its manufacturing sector. European nations depend on it for baseline heating and electricity, and the United States monitors it strictly to shield its domestic markets from inflation. This deep, interconnected dependency transforms a standard maritime route into the most highly watched geopolitical pressure point on Earth. The Strait of Hormuz acts as a physical anchor, holding global market stability in place. These 21 miles connect a regional conflict directly to the price of household goods and the stability of global markets. If you found this deep dive into the hidden systems that run the world helpful, subscribe for more. And let us know down in the comments, what do you think poses the biggest risk to the global economy today?